Hey, welcome back. Arcadium has to be one of the most interesting lithium companies out there. They had quite a productive half of the year and they now expect to reach the high end of the synergies guidance plus a 25% increase in volume this year and the next. And that's after expecting a 40% ramp up half a year ago, so they are very efficient despite the current market. They plan to invest about $500 million in growth this year, and that's even with a new target of reducing capital spending by around $500 million until next year. In comparison, SQM, the number one producer that's valued at like $10 billion, plans to spend a bit more than $600 million per year, so you can see that they aren't playing. And we haven't seen SQM's Q2 report yet, so maybe they cut the spending as well. Now, what makes this company very interesting is that they plan to triple or even more than quadruple the production in a few years. When they reach that, this will likely be the number 3 lithium producer on the planet, and they would produce a bit more than what the current number 1 makes today. That's, by the way, a $10 billion company in the current market after a huge drop. Arcadium is worth less than $3 billion now, so assuming that the market values them based on production, that's an easy 3, maybe even 4x by the end of the decade. Even by 2027, they should easily more than double the production, but it's all about the price of lithium. Even in this market, they can make about $400-500 million in net income per year, which is a lot of money for a less than $3 billion market cap during a huge investment cycle. That's, by the way, what SQM made in the past 12 months, and Albemarle, the number 2, had a negative net income. So this has real potential to be a very competitive company. The thing is, a majority of these projects are already operational and they just ramp up the production. Someone already went through the exploration, feasibility studies, waited a decade for the permits, got partners, and so on. They also make an interesting point about the lithium market. All the issues and cutting investments that we see now in every lithium company will have an effect on the supply. If the demand then increases even close to how it is projected, this can lead to a huge gap. Generally speaking, with commodities, I see this as the optimal time to buy because today's actions that we see every company do influence tomorrow's supply and demand balance. Financially, this is where it gets even better. They have enough current assets to pretty much cover the current liabilities and the long-term debt. What's left is around $6 billion in equity, or around $5 billion after the goodwill, traded at $3.5 to $4 billion. That's already getting into a very interesting territory, especially given the company's potential. So they are doing very well from a financial point of view, which is a strength that I really want, especially from a lithium company. I looked and keep looking into lithium companies, and many of them are getting to some very interesting level in relation to the balance sheet. But I think this is a bit tricky because that balance sheet can deteriorate really fast, especially if they lose money, so I think it takes even lower prices to get to a very nice margin of safety. You know, all the inventories and the other assets would be worth less in a market where they aren't profitable. Selling a mine that produces lithium at 10,000 when the price is, let's say, 5 would probably require a generous discount. What's very impressive about Arcadium is that if everything is okay, they should go from 70,000 tons this year to around 170,000 by 2026. That would basically make them the third largest lithium producer on the planet. If on top of that we see lithium prices jump, this can easily be a 3, 4, 5x, so you can see the potential. I wanted to wait and see how they develop together as a company, but so far I can say they are doing as expected. Of course, the market doesn't care about the quality and the potential of the company, and if there are issues with lithium, everyone crashes. And we saw this over and over, especially this year. This is the classic short-term noise, but in the long term, the stock usually follows the company, especially when there is such a catalyst. Ultimately, lithium is going to be all about supply and demand. A lot of companies are investing into even multiplying their production, and a lot of new projects should open in the next decade, but will it be enough? Albemarle sees a significant supply gap by 2030, but this is going to depend on electric vehicles. We see political changes in Europe, tariffs on Chinese EVs and so on, all of which can ultimately slow down the adoption of EVs and hurt the demand for lithium. If it's pushed even a few years into the future, that can be enough time for the production to ramp up, which can avoid the supply gap. But then, it's likely to see a lot of projects shutting down, bankruptcies and so on, which can then lead to an increase, because it's ultimately a cycle. I know I said this in probably every lithium video so far, but the risk of replacement is very significant. Unlike a metal like copper, which has a very diversified demand source, lithium is like 80–90% batteries. If there is a commercially viable discovery like sodium ion or solid state and so on, this can be the end of lithium. Even if it's not the end, if it cuts the demand by let's say 20–30%, that's it. On the other hand, if it takes a decade or two to get to such a replacement, that can be enough to see lithium skyrocket again, because even with a delay, the end of this decade should be key for electric vehicles. I think with lithium, if it's not the terrible case and no recovery, then it can be pretty good, because even if it's bad, it's a cycle, meaning that there might still be some potential. But with a company like Arcadium, even though we don't know the exact number, the break-even should be well below 10,000 per ton of lithium, meaning that if there are issues, there is a very good chance to see them survive, even more than Albemarle, which I talked about before. Again, it's a matter of production cost and financials. The thing with Arcadium is that they aren't a new company that's just starting to develop the projects. Their projects are all very close to production, and in the current market that's very important, because if there is a jump in lithium prices, you want to be able to mine it now, not in half a decade when you get the approvals and build what you need. Plus, there is potential to see one of the huge iron or copper companies buy them. You know, they make in a single good year enough to buy a company like Arcadium, and I think we are going to see a lot more acquisitions like this in the near future. It's also interesting to see how China is developing a very tight grip on the global lithium and other elements market. They are investing a lot in Africa and South America, and we can see tons of projects where they have at least half. You know, in the future, for political reasons, not depending on or being partially owned by a Chinese company can be an advantage. And of course, Chinese companies can also be potential buyers, especially if the government gives them some kind of incentive. But that also means the lithium market will probably depend more and more on China, so any issues or tariffs like the recent ones can affect the overall price of lithium. The valuation will be a bit tougher than normal because it depends on the production, the price of lithium and the market. Assuming lithium at 15,000 and production doubling, let's say they make 750 million. For a ratio of 6, that's a 4.5 billion market cap, meaning they would be valued at around half of number 1 and 2 while making about half of the production, so it seems okay. That's a price of around 4.2, meaning a 50–60% profit. Now, to be clear, if lithium falls below, let's say 10,000, there is potential to see them crash much more. You know, that's commodity investing. At such a level, the market wouldn't want to hear about lithium companies, so this can fall even below $1. Again, maybe the company wouldn't do that bad since they have nice financials and a good production cost, but it's all about the market. Now, let's assume that they manage to quadruple the production by the end of the decade and we see lithium stabilize at 25,000. If they can do that, they can probably make, let's say, 2.5 billion to be a bit more conservative. For a ratio of 10, that's a 25 billion market cap, meaning a price of 23.25 for a roughly 770% profit. Again, they would make even more than what the largest companies do now, and we saw them at such levels even with a lower production, so it's not impossible to see. Anything above this, maybe a supply gap leading to another boom, this can easily be even more than a 10x. Back during the boom, Albemarle and SQM were valued at like 40–50 billion, and again with a lower production than what Arcadium would have. So I think this will be very interesting to pay attention to. Anyway, I like Arcadium and I liked ALTM and Livent before, and I think there is a lot of potential. If they get to the targets, from the current level, this can easily be a 3, 4, 5x or even more. The risk and reward looks very good, and I've been waiting for the Q2 report before I buy, but now I'm probably going to do it. You know, if nothing bad happens, this is very likely a multi-bagger, and if it does, it's already very cheap, although it can still crash, of course. But again, I want to emphasize that there is still a risk, even if they are okay from a production and financial point of view. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.